Welcome back, everybody. Can we get a quick audio check? See if everybody can hear the audio. Just confirm in the chat. To make sure we're good. Let's just see. There we go. Everybody should be able to see the screen. Just give a couple of minutes for people to start coming in. Good morning. Welcome, everybody. Hope you're all doing good today. Welcome. We got people from Jen from London. How are you guys doing? All right. So as a prerequisite before we start diving in, this morning you can open up your calendars and follow along here. For today, we have a whole bunch of news going on here. Wednesday, we have starting out at 8:15, we have ADP non-farm employment change. We have employment claims at 8:30. And then we have a medium PMI at 9:45. And we have a ISM services PMI at 10 a.m. That is a red folder. And then, of course, we have FOMC meeting minutes at 2 p.m. So today is a minefield day. Lots of crazy news events going on. So it's not going to be a very clean market. If we just scroll over quickly and we just take a look at price action of this morning, we can see that since yesterday, we have basically been sitting inside this range, moving off slightly higher. So not much has happened. Very range bound. If we just zoom out, and you can see we had a massive rally up yesterday too. So that looking at this massive rally up after a massive rally up in the market, generally this would mean in the following morning's AM session, which would now be today, you would usually not expect a clean market condition because we had this massive rally up. So we would expect some kind of a chop or a retracement to get the stops of all the traders that are profiting from this rally up. So looking at this, we can see that price has rallied up and we've just sat in a consolidation. Now, no clear low has been taken out yet. So everybody that's long in this marketplace is still in some sort of a position. So we need to see some retracements to take these people out of their positions. That is the mindset that I have going into this and looking at what has happened. So I would look at maybe this fair value gap. Definitely these equal lows, they draw my eyes. And this fair value gap is really good, coupled with this order block. That's a really good level to see a retracement to before we start looking at any directional moves. And to be quite honest, this is still NFP week. And we do have a bank holiday tomorrow. And on Friday, we have the NFP at 8:30. So my expectations for today is really range bound. If we do anything at all, then a retracement would be a given, so that we can take people out of their long positions. And then I'm going to be focusing on chop for the most part. That's going to be my expectations. And for tomorrow, bank holiday, not another day that I wouldn't be looking at any trading. And I'm just expecting them to just keep it really slow. There's not going to be any big players in the marketplace. And for the most part, it's going to be chop for that whole day. And the same thing for until we had that NFP release. They're just going to keep it pretty range bound. And they need to get people trapped in their positions for the NFP release. And usually what happens is they would clear one side or both sides of the marketplace, and then they start rallying again. Now, like I said in last week's stream, that I wanted to see bullish price action, I believe, in futures markets. And I want to see dollar tank. Now, if you look at the seasonal tendencies, then coming into this week, my expectations were still pretty much the same based on that idea, because I was still looking for that bullish price action in futures, and I was still looking for dollar to tank. And that's my expectations for this week, basically. As far as trading went, coming into this week and looking at the calendar, Monday was a trading day, 9:30 and the 9:50 to 10:10 macros. Those were my focus shifted to those. And on Tuesday, I was looking at the 9:30 and I was looking at the 9:50 to 10:10 as possible trading opportunities if they present themselves. And Wednesday was just the start of the landmine field coming in, and for price to start going sideways and start trapping traders for the bank holiday. And the bank holiday would be a continuation on that trap, and just keep everybody trapped, move it real slow and get more people to come in. And then on Friday, which normally the day after a bank holiday would also not be a trading day, just because all the money is really excited and they jump in. And it's overall generally not a very clean market. And with this example, we have NFP coupled with that idea, as well as I did post earlier this week that we are going into a new quarter, and this is a new month as well. So those are things to keep in mind as well. And it just adds up to this week not being one of the cleanest weeks. So that just means, it's a good idea if you do want to take a trade in a week like this. Scale back your risk just by looking at all those ideas and looking at the calendar. Scale back your risk. It is a great idea to preserve capital. That is the number one. The number one rule on top of your list is capital preservation, and secondly would be risk management. So that even if you do have a bad day or 2 bad days, you can still take those and you can go home with them, and you can come back the following week or when a setup presents itself and you don't feel any FOMO, no emotions, and you can get back in there with a clear mind and you can make back what you lost plus a profit on top of that. So I do want to go over Monday's price action, and I do want to take a look at what happened on Tuesday as well, and just frame out the setups that I saw in the charts. Just a quick look at them. We're sitting inside of a consolidation. We'll make an analysis on this in a bit, but like I said, I do want to see retracements on this. We did clear this high as well. We cleared that. And that again, we took out this high. That could set the stage for a retracement though. Well, just have to wait, just have to see when we do analyze this. See that I like this 4-hour fair value gap. I like that as well. We cleared this high. So I do like the idea of retracements. We took out these equal highs on the hourly. I do want to see these lows get cleared and go into this fair value gap. To me, that's the first thing that I see when I look at this. Even though I do expect bullish, I do want to see them trade down lower. Now, you guys can go in and follow along by opening up the dollar index on your computers. On dollar index, if you look at a 15, to me, this looks like a market maker sell model right now. We are trading lower. If you look at 2 a.m., I could just open dollar up over here anyway. Let's just do that. If you look at this, see that? We're in a market maker sell model. And if you look at 2 a.m., we traded out lower. And since 5 this morning, we sat inside this consolidation. We traded above this high. And we're inside of this range. So in dollar, we still have this massive rally down as well, where these guys still have their stops above these highs. So I would like the idea of a retracement to take these guys out. Looking at a daily, not much to see. We have this volume imbalance over here. We're sitting inside of that right now. You see we have this high, we have this high. We're sitting inside of this 4-hour order block. We're sitting inside of that. So that's a level that I would take note of. Look at the 1 hour. This wick. That wick right there. We have this gap. We did trade into that gap and we traded down lower. We still have these equal lows down here as well, but that is quite a distance away from where we are right now. So if we are to get down there, then we really do need to get animated if we want to see these lows get taken out. Seems like we had these two up candles, which coupled with a fair value gap and a fair value gap, that would be a order block, extend that through. We traded up into that here. We respected that and we traded down lower. We took out this low with quite a nice impulsive candle. So as far as right now, dollar still seems to be bearish. Just because we are still respecting bearish PD arrays. With this guy over here. We do have some equal highs up here. These guys over here, those over there. You also have a relative equal lows down here. So this is a 50-50 marketplace in dollar index. Because I can see equal highs, I can still see some relative equal lows down here. So that's 50-50 to me. Let's glance at let's look at ES. Basically the same thing where we are sitting inside this consolidation. And let's just go up to a daily. See that? We have these almost relative equal highs. Keeping in mind that this high was higher than this one. So we did go above that high. See that? We went above that. And we still have relative equal lows down there. We made those yesterday. See that? Way too clean. So that will be 50-50 as well. Same thing can be seen on a 4-hour. However, we did trade below these. You can see it by a little bit. Yesterday. So that's something to take note of. We're sitting inside of this wick. Consequent encroachment of that wick over here. We're sitting right inside of that. So that's the level that I would take note of. Same thing on the hourly chart. You can see that same wick. We're sitting right at that. I would want to see retracements here as well because these guys have just been profiting. They have been profiting. So I want to see retracements on this. The dollar is rallying along with the indices. See that? That is low probability. You don't want to see dollar index rallying along with the futures markets. You want to see them dollar rallying higher while these guys are dropping lower. So I would want to see them take out this low, and then this fair value gap is clean. Even this one here is nice as well. Just glance over at the 5-minute on NAS. See that? Really messy. If price action is like this, it's just sitting sideways, then that usually to me is a big red flag of a low probability condition because we are sitting inside of this range. So usually when I come in and we have a range like this, then I would wait for price to take out one side of this range. And then usually, like I said, I want to see the NAS go lower. I like the idea of this fair value gap. And let's go ahead and let's note that anyways, because I'm going to keep on referencing this anyway throughout this live session. I like this fair value gap. So that's going to be a gravitation for me. And I like these old lows as well. So see how that lines up? It just lines up. Perfectly lines up there. So that's what I want to see it gravitate towards. And then if it wants to get animated, then I want to see this fair value gap. That's what I want to see over there. Now we did have this range, this low, that high. And we did trade higher and we took that out. But the narrative here for me is that I like these equal lows and this idea, the premise here behind this, that we rallied up higher. And these equal lows here. So that sets the stage for me that I want to see bearishness come into play in this. So then with that idea of I want to see one side of this get taken out and I want to wait for price to clean up. Now in this case we did with this range over here, this range, we did take out the high. We did so impulsively as well. So this might be the buy side cleared on this, which could set the stage for lower prices if they have taken the buy side liquidity. Looking at a 1 minute, you can see this is really messy. And another thing that I don't like is, let me just go up to a daily because I'm going to need to draw this. I'm going to need to extend this wick. It's going to be a daily wick consequent encroachment, and it's also going to be an old high. It's going to be yesterday's high. Because I want to look at this and then let's just see, where is that level? Way back over there. Let's see if I can refine this or find something else here that I like. I like that level though. I just want to see how it looks if I just note from that exact high. Really looks almost the same. It's really close by anyways. So let's note this one as, let's note that as yesterday's high. And then this one, just leave that as the wick consequent encroachment. Just scrubbing through this. We also have these highs, but that's relative to this yesterday's high. So it's not worth noting and having everything be cluttered on the chart because I know it's there and it's in the back of my mind. We do, however, on the 15 have this wick. So we did take yesterday's high and this long wick. I like this. So I'm going to note the consequent encroachment of this. Let's change the color. Let's make it red. See how we took these highs? So that would classify as liquidity taken. And high, low, higher, high. So this would be, I would classify this as a breaker block over here. And that probably is something that I would look at noting because we are close to this level. So that's something that I would look at. So the point that I wanted to make was if you're looking at this and we're trading up, okay, we're through yesterday's high over there. That's a vital point in price. So we're above that. And then we start trading down lower. And then we get that 15-minute wick consequent encroachment. And then you're looking at this piece of price action. So what would happen is I would have liked to see that we have this structure in place. And then this structure here, which is not clean. So that's not going to be the best example for me, but a structure like this, looking at the higher time frame level. So we tap into that higher time frame level. Time of day then needs to come into play. Then I would look for a model in here, in this area, to target these lows. That's what I would like to see. I want to see that we are in close proximity. How can I put this? I want to see that we are still in a premium. If I want to take shorts, then I want to see that I am still in a premium. So generally, I don't like when we dribble down like this and we have something forming over here. I generally just don't like to see that. I like to see something like this, where we are in a very deep premium and we have a setup really close to the high, really close to the higher time frame PD array. So in that case, you see that 5-minute breaker block. See that we had if I look at this over here, high, low, higher, high. So this would be a breaker block for me. I would look at that as a breaker block. I would extend that daily wick consequent encroachment through. And this would be an order block. I like these two candles. And then we have this fair value gap as well as this one. And that would make a 2022 model. However, as you can see, that would be 8:30, 8:15. Excuse me. So 8:15. So even if I sit here and I see all of that taking place, it's still not going to be valid for me to take that because time of day relevant. It needs to be 8:20. 8:20 to 8:40. And we are 5 minutes early. So then I would have to sit and wait 8:20, and I would have to look for something else to get long with, which would then in that case be this order block. Couple that with that 5-minute breaker block, and we can clearly see that 5-minute breaker is getting respected because we rally down with a propulsion. A good way to frame your range is to take a fib, and I did show this example, and it was in the live stream as well, or it was in that weekly review that I posted, I believe. You take your range. So the range should be from that breaker block down to this fair value gap. That is my potential range. And then I will look at a setup forming in this area, which would then be in a premium. So anything forming in this area here could be in a premium. And then what you would do is you would look from finding at where that swing starts to, where does it originate from? So what I mean by where does it originate from, I would look at this high. So I would then take that and I would extend that up to this high, because that is from where this swing high, and then that is from where the swing originates. And that would give me the range down to the 15-minute fair value gap. And within this range, I can have above 50%, I have a premium, and below 50% would be a discount. So anything above 50% would be a viable premium. So we could then look at taking short positions in the premium. And that depends, it depends on what you're going to see in your trading. It's not going to be, you're not going to see the same thing as me. You might like to trade order blocks. You might like to trade fair value gaps or inversions. It depends. You need to go with what fits your personality. By the way, I love this rejection we had here, 830. See that? We rejected that 5-minute breaker plus this order block over here. We also have a inversion. And see it rally down. That's nice. I like to see that rejection there. And we rejected this area. Let's just annotate these levels. I'll just note them and change the colors. Inversion. Just make this one orange. The fair value gaps, I'm just going to leave those fair value gaps. Just clean this up a little bit. Just throw this text inside. I think that's going to be the cleanest. And this is going to be the breaker block, the last down close candle right there. Breaker block. These are just fair value gaps. I'm just going to take note of one. And you guys know that the other one would be a fair value gap as well. And then these two up close candles would be the order block. That's what I would use for an order block. Now this inversion is, I love seeing an inversion like this. When we traded a higher time frame level, which in this case, we're just going to use this daily wick consequent encroachment. And we traded above these highs. So we traded, so the question, or a question that a lot of you guys probably would have is, how do I know that this setup or this base, this foundation for this setup is going to give me a good foundation to possibly take a short? And then one of the answers that I would give you is, if we had a inversion, and if we trade through that inversion with propulsion, which you can see we did, and we trade back into that, and we reject that, that is a sure sign that it's gonna keep on running lower. And that gives you confirmation to then, let's say, look at this order block coupled with this 5-minute breaker block, and to take an entry short, possibly somewhere in here. Now, see that? There's that 5-minute breaker block. high, low, higher, high. Traded through that beautifully. And we rejected it really nice. The moment I saw this impulse move down, then that's another confirmation that we are definitely on side with the marketplace. So couple this 5-minute breaker block with this order block. Just gonna note it as an order block, and we'll make this order block blue. And I'll just pull that through a little bit so we can all clearly see this. So this order block, now the structure that I would have behind this is the fact that we traded into this fair value gap coupled with the breaker, coupled with the order block. And we also closed below the inversion. I mean, that's beautiful. That is a work of art. Seeing it reject and close below like that, that is a confirmation. It's a sure sign that you are on side with the market. By the way, dollar is still trading now lower, which that is not something that I would prefer to see. I would prefer to see dollar trading up higher. And the other indices still seem to be in sync, trading down lower. So that's good. So then, coupling that idea with that rejection and this order block coupled with that 5-minute breaker block, once we trade below this order block, any one of these candles with rejection, see that? They all have rejection in them. And look at how they are rejecting at this 5-minute breaker block level. See that? Another confirmation that I like to see. And that just tells me that I'm on side. And then we get this massive impulse move down lower. That is a beautiful, sure sign. It gives you confirmation in your trade. It gives you confidence in that trade if you're in that position that we are running down lower. And then to put the cherry on the cake, we have this fair value gap over here. And I'll just take note of that. And look at how the candle bodies are at the consequent encroachment of this fair value gap. Beautiful. Sure sign confirmation. It's exactly like we saw just right there. Traded into the breaker, order block, fair value gap, closed below consequent encroachment. That is another confirmation that we're going to keep on tanking. Keep on taking it down lower. So that is a beautiful, beautiful thing to see. Now, for stop loss management, let me just do another example. So if, let's look at time, 8:21. See that down there? 8:21, we rejected that order block, closed below the breaker block. That is a beautiful confirmation. In the next candle, that's probably where I would look at taking a possible entry in that setup. For stop loss management, we have the order block. We have an inversion. And we have a fair value gap. So the stop, I would look at placing my stop above that fair value gap here. That gives you the order block. That's your first PD array. Second PD array is inversion. And the third PD array would be this fair value gap over here. So the stop needs to be above that fair value gap. That gives you 3 PD arrays. And that would be a safe place to put your stop. Now, perhaps you wanted to take a bigger stop and you wanted to place the stop above this fair value gap. then there's nothing wrong with that. You need to do what makes you comfortable. You need to come into this and you need to apply your own twist to trading. You need to add your own twist to things so that you feel comfortable in those things. So again, that's going to be something that you're not going to agree, or let's not say agree, but you're not going to feel the same that I feel about placing the stop here. You might feel like you want to place the stop above the breaker block or above this fair value gap, and that makes you feel comfortable. I feel comfortable placing it there above that fair value gap. That gives me 3 PD arrays, and that's enough for me. You might feel differently, and that's where you need to trust in putting your niche into the charts, into trading. That is just something that you're going to have to do. Now, if per se you took that setup, usually I look at a 1 to 2, but I also look for something that is nothing less than 5 handles, which 12%, that is about 5 handles. That would be about 23 ticks for the guys that look at the ticks. And there's your setup. Now you can see this is high resistance liquidity run. We're trading now lower, we're trading higher again, now lower, sitting sideways, going lower. See, that's high resistance liquidity run. Not the best run. See how we're close to this target now? Now, in a day like this, if you took something like this and you got your 5 handles and you close your position, whatever you made, you take that home and you turn it off. You close your charts for the day. By the way, let's minimize this. You close the charts and you call it a day. And that is it. You don't try, oh, it's gonna keep on going down lower. Oh, I can get more. It's not yet hit the target. Doesn't matter that it didn't hit the target yet. You still profited in that position. You still made the 5 handles. So you take that home. Now, again, this is going to be personal preference. Some of you might look to take 5 handles. Some of you might want to go for 10 handles. It's going to be personal preference. Starting out, 5 handles would be recommended. It's an easy blow. It's easy to get 5 handles. It's quick to get 5 handles. And if you can constantly get your 5 handles, then it builds your confidence. And as you go up in size with position sizing, then you can start taking, let's say, for instance, you're starting out with 1 contract, and then you can build that 1 contract up to 2 contracts. And then what happens is you got your 1 contract. As soon as you hit the 5 handles, You take a position off. You take a partial. You pay yourself, pay the trader. Pay the trader, put the stop in a profit, cover your fees and your commissions. So even if it turns around, comes and gets you, you don't lose anything. And that kills all the emotions you've got. Because you've already paid yourself. No matter what it's going to do, you've already profited from that position. So that is something that you grow into, and then you start adding to it, and then you watch the position. Do I still have a potential to run up to that full 10 handles that I expected to run to? That is how you grow into it. So we're just watching that, seeing if it wants to go down lower. So far, that would have been a 16% run, 31.8 ticks. And this fair value gap, let's look at that as well, because I feel like that would be something that you would be looking at as well if you would be a fair value gap trader. This would be the exact thing that you would be looking at, taking an entry. You want to see that impulse, that fair value gap. These up close candles, I would look at them as the order block. Notice how we traded right to them. We traded to that. See that? Also traded up into this one. So I feel like this is a fair value gap that you would be looking at. It's plain as day. You won't be able to miss this one. So looking at that fair value gap, right after the candle rejects like this, and we to get a closure on this candle. It's 8:30, so time of day is still good. You got till 8:40 in that macro to look for a potential entry. So 8:30, we close down with a rejection below consequent encroachment. In the next candle, I look to see if we start trading now lower, or if it still wants to keep going up higher, or if it wants to go up and trade this consequent encroachment one last time. So then that will be your entry. So the stop in this case, you would have this fair value gap. You would have this order block coupled with this order block as well as that 5-minute breaker block. I would place the stop at this order block here. That's where I would place the stop. And then you go for a 1 to 2. 1 to 2 or 5 handles. In this case, 5 handles. See that? You're going to get a 1 to 2, 2.7. But 5 handles would be the minimum. And take note, in the range, we would still be above the 50%. So that would still be a viable entry to go long. To take a short, not long. So that would be your position. It rallies right into a profit. You sit through some consolidation and runs right to your target. So it's not about it needs to run into this 15-minute fair value gap. It has to go there. I'm holding for hell or high water. It needs to go there. No. You sit down, and as you journal and you tape read these setups, then you will figure out what you feel comfortable with. By the way, let's look at this fair value gap. Let's look at this and see how that sends. We can look at that order block, in fact. We're right there. Let's look at that to send price down into that. Let's look at that idea. If you took this fair value gap order block, stop would have to be above that, the high of that fair value gap. So the fair value gap would be there. So I would look at placing the stop right there. And then we would be targeting the 12%. 5 handles. Let's see if it wants to run down and give us that five handles. Should start to see some really fast price action now, because we have these equal lows right there, coupled with that fair value gap. So I want to see it really explode towards that now. Could trade up into this now inversion before it wants to run down. But let's look at that idea over there. Now, as I was saying, you will find in your journaling and your forward testing and back testing that you will see what you like. Do you feel comfortable going for 5 handles? Do you feel comfortable going for 10 handles? Now, if you start out, then it's going to be a really good idea to go for 5 handles and call it a day. 5 handles is an easy target. It happens day in, day out. It repeats weekly, so there's no need for FOMO. And you can do really well with just 5 handles. You can do really well. Even trading micros. Transitioning from a demo to live funds and starting with micros. See, there's the gap. You get that gap where now it's not demo money anymore. It's real money that you're working with, and with that comes emotions. Because now it's not okay, you took a loss in the demo. You'll make it back, it's fine. It's got that aspect of it's real money. You lost real money or you're making real money. So it's got that emotional aspect behind it, which that is something that you need to work through. It's something that you're probably gonna battle with until you get comfortable again by journaling and tape reading. And then with that, you know that these setups repeat. That specific model that you use repeats on a daily basis, and it repeats weekly. So there's no need for you to feel any sort of FOMO, even if you take a loss. Okay, that's part of the business. You're gonna take losses, and you're gonna need to feel comfortable taking losses and taking those losses home. We now want to see this rally down from this inversion. I would like to see that rally down now. So that's something that you're going to need to grow comfortable with. And it's not going to happen overnight. It's going to take you time. Trading is a business where you're going to need to learn how to be patient. It takes longer than you anticipated it to take. And it takes more work than you anticipate to put into it. Let's see now. Want to see it still trading lower. So there's a transitioning between demo funds and live funds. And the thing is, it's emotional. And it's something that you're just going to have to overcome. Now, this is something that I don't like. I don't like to see this. We do have a fair value gap inside here. That would be a balanced price range because we have this fair value gap as well. So balanced price range coupled with this inversion. I do want to see that trade down lower now. We have an equal low down here. So let's see if it's going to go now lower or if it's going to want to rally up higher to take out these highs. We're rolling into 850, which 850 to 930 about. We already had a nice rally down. This could be a consolidation before we see another rally down. Let's see though. I want to see this one rally down now. So there's going to be that transition period, but by the time you are in a demo, you should already have all your back testing, all of your forward testing, as well as tape reading behind your sleeve. I don't like the way that it rejected here. This down candle, I don't like the way that it rejected that order block. Let's bring that a bit closer in. So you have all that work behind your sleeve and you've got all of it written down in your journal. So those are things that you can look back upon and you can see it's worked this day, it's worked over there, it's worked this week, it worked for that month. And that, it gives you that fallback and you can go look at your journal and you see that these things repeat on a daily basis. And that gives you confidence. And that gets rid of the FOMO. So there's no need to feel any sort of FOMO if you missed a good setup or if price ran without you. It repeats on a daily basis. See, this year I don't like. We're hanging around. We're not going anywhere real fast. Also don't like the fact that we're trading above this now. See if it wants to go to these highs. Definitely is pushing higher. Let's glance over the 15. Glance over that real quick. We did have a decent run down lower. Really, really nice run down lower. That's what I came in this morning and that's what I wanted to see is this run down lower. And by the way, there would have been no trade inside of this. There would have been no trade for me. I would have been looking at this breaker block over here. This one. And that happened at 8:15. So that is outside the macro. So that is a no trade for me at all. So that's a passerby. Even though we had this 5-minute breaker and we didn't have this order block coupled with it, I just wouldn't have executed on that because I like to get my entry model as a breaker block. So I would have wanted to see another breaker block pattern form over here if I was to take that entry. So to me, that would be a no trading day. So far, it would just be a No button yet. But for as a fair value gap trader, you did have, if we look inside, if we come into 820, then no fair value gap entry, but fair value gap, guys. You got your fill at the 830, 831. There was a nice fair value gap. That would be something that definitely you would look at as a fair value gap trader. As an order block trader, you would probably be looking at this. You would have looked at that. See, this is not looking good. See how we traded down back into that, rejected it, traded back down again. Let's look at this order block. We still have that order block. We're back inside the order block. Let's see if that order block wants to push us down lower. Doesn't look like it. It looks like it wants to go for these highs. It's currently sitting sideways for sure. I want to change the color of this. Let's make this red. Relative equal highs. It for sure is going to go up there. But it's also, this is high resistance liquidity run. See this whole move down lower. It's been high resistance liquidity run. Not the best conditions to be trading in. Let's just look at dollar quick. Let's glance at the dollar index. This is something that I also don't like. Dollar is stagnating. US 500 is stagnating. Look at how messy this is. Stagnating. US 30 is stagnating. So that is a good indication that it's probably not going to run down lower right now. So if you were inside of some sort of a position, it's probably a good idea to pay yourself something by taking a partial or by closing a trade. If you per se, let's say you took this, then that would probably be something that you would then look at closing. I hope you guys are taking notes on this stuff though, because I am dropping some really good tips on this stuff. Those are questions that in my journey, that I wondered about. So those are things that you guys most definitely need to write down in your notes, because you will refer back to them. So if I was in this, then this is where I probably would just take a scratch on this trade. Call it a break-even trade. Closing it there would mean my commissions and costs were covered. But let's see what it does. Let's see if it still wants to push down lower or if it's going to rally up higher. It's again, I don't like that, right? What it's doing right there. It's rejecting this consequent encroachment again. So that is not something that I want to see. Order block, look at that order block. Look at how it trades around this order block, if it's still respecting. We also have this volume imbalance. It has to trade down through this now. It needs to trade down through this. It's at a point where I would place a time stop on it. And per se, it's 9:04. It's in a time where I would expect price to be sideways up to the 9:20, 9:30. So I would give it, per se, maybe 2 or 3 minutes for it to get below this fair value gap. And then I would also look at taking something off if I was in multiple contracts, or I would look to close the position entirely. And that is how you would manage or apply a time stop. And the only way to know when you're going to start to apply a time stop, that is done by journaling. You're going to be journaling, tape reading. This is good. This is what I want to see. Now it needs to stay below this. Go below these lows now. Took these equal lows out. That's good. It's only going to come through experience, where you're going to see, okay, this is where I need to start applying a time stop on this position. Even if that means taking a small loss, then you are still going to apply that time stop because you are preserving your capital. So you're going to look at, okay, I'm going to need to take a portion of this trade off. Or, okay, this is eating into my minimal capital. It's painful sitting through this. So just close it, preserve your minimal capital, preserve your capital so that you can come back on a different day with better market conditions and you can execute a trade if the idea presents itself. So we traded below this. Now I'm looking at this order block. Didn't take that high. We did take this one, but we did not take this one. So we did take liquidity, buy stops above that, but we didn't take this one. So see, this is where that time stop would come in, and now I got to see, okay, what's it going to do in this candle? Are we going to rally down? Because if we don't rally down, then this is where I need to step in, and then I need to look at take something off, or I need to close this position entirely. Right now, it's just not looking good. Need to run down in this candle. It's at that consequent encroachment. I want to see it rally down. Failure to rally down here would mean that I would look at taking something off, preserve my middle capital, preserve my capital too by cutting a portion of this trade off back above this fair value gap. We also have indices out of sync. Dow is running up higher. US 500 is stagnating. Dollar index is rallying down lower just now. So this is where I would reduce a portion of this trade. Or I would take, if I had 2 lots on this trade, 2 contracts, then I would take something off. I would take one of them off, even if it is in a small loss. Because overall, I would not wait for it to take the stop and take the full loss. I would cut some of that loss here. And that's how I preserve capital. So I just don't like this at all. So that would be where I would preserve capital. We have equal highs. Not a good sign when you're in a trade and you're seeing equal highs. These guys are, it's so close to these guys. They're not safe. They're going to be targeted. That's how I would look at a time stop, by the way. That's how you look at that. How you keep on managing your position. So we are still waiting for that. The next news, and it's only a medium, is 9:45. So I would expect to see some volatility stepping in at 9:30. And then I would expect 9:50 to bring something to the table. Dollar is dropping. Dow is rallying higher, and US 500 or ES is still stagnating. Same thing on the NAS. So this is how you would anticipate high resistance liquidity runs, by the way, by making use of your calendar. Make use of your calendar, guys. Plan your trading. It feels painful to sit through this, doesn't it? But this is the only way you learn what is real jade and what's no good. It's the only way how you will realize how a real diamond looks and how fake diamonds or zirconias look. You got to look at and study the market, and that takes time. We haven't taken a break yet today, but we are tape reading this. And this has moved down since 820. It's been moving down, and we've just been watching this. Dollar is really rallying down, by the way. It's really going down lower. Pretty much sideways. Dow is rallying higher, and US 500 is sideways. I do have all of them open in front of me on a 15-minute time frame, just watching them. I still do believe that it is going to target this fair value gap, and if it wants to continue, then trading now lower, possibly another leg down lower, then it's going to go for this fair value gap coupled with this order block. It's going to trade into that. From that point on, it could go back up into the range, which that would be my expectation, since we do have that bank holiday tomorrow, and Friday we have NFP. So that would be my expectation, would be for them to take it down into this, push it back into the range. We do have that FOMC though, so that might bring some surprises to the table. So they might want to clear the highs as well. They might want to put a new range in price. But for now, they want to get to this fair value gap. And if they want to go lower, then we'll see this fair value gap down here. Let's just look at the 1 hour. Taking out everybody that was short is really feeling the pain now. Everybody that was long is they got their stops taken on this. See this 4-hour fair value gap. This is another, my eye draws right into this. And by the way, we will look at Monday and Tuesday setups. We're just waiting for that 9:30. I think we can look at those setups real quickly because this is not going anywhere real fast. Just keep an eye out on your screen, on you guys' screens, and we'll quickly look at those setups. They're punishing the sellers that want to see that fair value gap come into fruition. Let's go look at this. That's why this looks so absolutely like such a mess. Do I still have Mondays? Yeah. By the way, I came in Monday and I I still wanted to see bullish price action, but we had lows. We had lows in, and I saw those equal lows, and I was like, yeah, we're probably going to run for the equal lows. Monday morning. This is all Monday. So I came in Monday morning. I was looking at this. See that? We got this low, that low, that low, that low. We had all those lows. And I was looking for bearish price action. I just want to see what dollar did on Monday. What did we have on dollar? When was this? Oh, yeah. I could just show you guys. I'm just looking at it like on this separate screen. Dollar was, I think this was Monday here. Yeah. I came in and I saw this gap. And we were trading down here. So I anticipated price to go into consequent encroachment if they trade these equal highs. That was my first expectation. But then dollar just started rallying along with indices, trading down lower. Going back to this idea, see that? It just started trading now lower with indices. And I believe US 500 had the same. See that? It had lows, lows, lows. It just had clean lows like across the board. I remember US 30 has been nothing clean. It's been really messy, stuck between higher time frame levels in this pair. On Monday, I look at this wick. Just looking at that wick and these lows. But I was anticipating something to draw us down lower on that chart. Overall, though, see that? There we go. It took the stop out on that one. It made you sit through all the pain and then rejected that fair value gap, failed to go any lower right at the high, took it up higher above these highs, to call it that. So that's a nice little lecture on how you should use time stops and how you would look at just looking at price and how price trades. And that's something that you're gonna have to journal and study and do on your own to get these signatures to know when, if it rejects like this or it's gonna trade that way around that PD array, then that is something that I don't like to see. So now we can focus on these setups. So with the idea of those lows in mind, those equal lows, we had 9:45 PMI, medium impact. 10 a.m. red folder manufacturing PMI. So I was expecting something to form at the 9:30 to or something on the 9:50 to 10:10 macro. So 9:20 to 9:40 or 9:50 to 10:10. Something there, something at market open or something at the 9:50 macro. And we had nothing besides a consolidation. This higher level, that was a daily order block. That was something that was here as well. We traded right at that level. We held that level. And for the breaker block, high, low, higher, high. So this is a breaker block. You had an order block with these up candles, fair value gap, inversion, pull that stuff through. And then you would 9:30, price trades right up into that. It rejects below that daily order block. Bam. Take it down. 5 handles down. That would be a potential setup. Then we also had a order block with a fair value gap. Pull it through 9:38. That will be another potential setup. We also had high, low, higher, high here. So that would be a breaker block. Traded into that. Lower. Another order block, fair value gap here. Traded into that and go down lower still. This one is outside of the macro though 940. So that would be a bit outside of the macro. Might be something that you would not take. And then we straight shot rally down. I was looking at this level the whole week, which this was a weekly fair value gap. That was the initial target down. But we had those 15-minute lows, and they then got targeted. Not much for the rest of that day. We had a retracement, and we had one lash push down lower with a move targeting these highs. We actually got this one as well. Up higher. And nothing clean for PM session. We just rallied right on up. Maybe got a clean setup here, rallying up higher. But anyway, that is outside of the scope of what I was looking at. For Tuesday, I was looking at higher prices. Let's look at the higher time frame for that idea. So sitting down on Tuesday morning, I was looking at, here we go. I was looking at this. I was looking at this high and this high on a 15-minute time frame. And those equal highs. We also had a 4-hour order block, a daily week consequent encroachment, and we traded into this weekly fair value gap and we moved off higher. So let's jump into the daily, look at the higher time frames. So Monday we traded down higher. So that's that weekly fair value gap, traded off higher. Daily week consequent encroachment. I annotated that old high there now. Wait a sec. Daily order block. That was something that was annotated, I believe, on Monday. So for the 4-hour, See that high lines up with that 15-minute equal high that I was looking at. Here's that 4-hour. I believe this was that 4-hour fair value gap order block. No, it's not. There's that 4-hour order block. 4-hour order block. I saw that. I extended that through. Looking at the hourly. Saw a balanced price range here and here. That gap. I extended that gap. That is a great, if we trade above that and retest that, that's a wonderful idea. Then we also had this 15 fair value gap. We'll get to that once we get down there. The daily order block, I extended that through. Upping into a 15. Let's go down. Let's go back. So there's that 1-hour balanced price range we had. That 4-hour fair value gap. The daily wick, I extended that through. I then, what caught my eye was this fair value gap. We were sitting below that 9 o'clock. Still sitting below. I wanted to see price trade through this and then come back into that, coupled with that daily order block. I wanted to see that give me a potential setup to go long, trade into that 1-hour fair value gap above this high, 15-minute fair value gap up here, equal highs, coupled with a 5-minute. Let's look at the 5-minute. Didn't look at that. Coupled with a 5-minute. Their 5-minute old equal high and a daily old high. So there was the 5-minute equal highs coupled with, I believe it was just Monday's high that I was looking at over there. And then I had this rectangle was a 15 fair value gap that I saw up there. Yeah, that's correct. 15-minute fair value gap, which would be that one right there. And that was what I was looking for with that framework of that idea. Scrub this back. Let's get into the setup. So with this one, we actually had a 850 to 910 macro come into play. Low, high, lower, low. Extend that through. We're sitting inside of that. Couple that with this fair value gap, that order block. I was also looking at the potential idea of it actually coming into this low, high, lower, low with that, couple of that breaker block, order block, fair value gap here, extend that through. They did not do that. They started running up higher. Super close to that 4-hour order block. Didn't really hit that again. So it ran off that initial idea. Higher. So there's that position. The stop would there be fair value gap, order block, breaker block. It'll be somewhere below these levels. And you would be targeting 2%, which would basically be this high here and this fair value gap. Anyway, we ran up higher, 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 higher. Finally got to this 15-minute fair value gap that I was looking to get inverted. We traded through that, traded back into it. Now, with this one, it's not visible on this one. Let's go to NAS. Because that price will be there. Let's go look at that exact same thing. Let me just find it here. So if we look at this really, really, really close, and I don't even think a line is going to do it justice. But can you see how this low? Yeah, let's zoom in. That's fantastic. See that? See how this low of this candle stabbed below this one. See that? Look here. Look at the low. Look there. See, on this candle, it was 1997. On this one, we had, 1997. On this one, we had 1997 0. This one was 97 1. So we're traded below that by one tiny little bit, I guess I could say. And with that idea in mind, let's just scrub back to this real quick. Just quickly scrub back to that, not waste any time to get back to this. With that idea in mind, I don't like when it looks all squished. With that idea in mind, this would be a low, high, lower low breaker block here. Let me just manually do this because it's not going to work with me here. Let's just make it look big. So low, high, lower low. This candle right here. And there was something on a 5 minute. I was looking at something on a 5 minute here. Let me just check this. So I was looking at something on a 5 minute. Maybe not. I thought I was though, but I guess not, because it would have been noted if I was looking at something specific. Let me just find my bearings. Here we go. So this high, pull that through, couple it with this inversion, couple it with the daily order block. So this is a beautiful level. It's got nice framework surrounding it. It's got an order block. It's got that nice fair value gap. I was looking at this candle for the order block, by the way. See, that order block is right inside that daily order block. It's sitting right at the low of the 15 inversion. Beautiful price action. Traded through that with propulsion, and we then we tap the consequent encroachment. It's beautiful to see, man. It's beautiful to see. Right inside that order block, it rejected it up. 930, rejected higher, almost closed above the high of that 15-minute inversion. Confirmation, beautiful price action. In the very next candle, we opened up, we traded down lower. We opened up, we traded into the breaker block. Traded into the breaker block, and it was off to the races. Then we targeted this 1 hour fair value gap, and we went for that 1 hour equal high. Off to the races. Let's reset this. Here we go. It was off to the races. It rallied up right higher. Let's look at that stop there. you would have that breaker block, order block, fair value gap, stop needs to go below the order block. 3 PD arrays. We also have that daily order block as well as that 15 inversion. So we have that foundation. We got that supporting us with that specific trading idea. Beautiful little run up. It was a more difficult breaker block setup. It's not the typical run through the high, come back to it, and then take the entry, trade off. So it's a more advanced breaker block. That's what I would say it is. We rallied up higher through those highs into that 15-minute fair value gap, stagnated sideways, traded out lower into this fair value gap. We also have this one into this 1 hour fair value gap, consequent encroachment, rejected that, traded into it one more time, right through this 15 fair value gap, cleared the high through the 15-minute equal high, order block, fair value gap, extend through, traded into the fair value gap, off to the races, and it traded right into this ultimate traded into that and through this 15-minute fair value gap over here. And actually I did get the daily quick consequent encroachment, went up into that, retraced down, and ultimately went up higher. Almost like a lunch, had a lunch retracement. And then at 1 o'clock, we had an early PM rally up higher. Trading right up into these levels here. Clearing these highs. So beautiful to see. Through all the rambling, we did miss the 9:30 opening, which rallied up higher. So it didn't get to this 15 fair value gap. They just took it into the range again above these highs. So everybody that was short, they got taken out. What happened over here? Everybody they induced traders to get long in here. They shot it up impulsively. So everybody was chasing this thing, taking long stops below these lows. So everybody that shorted got taken out. Long buyers induced. We still have FOMC ahead of us in PM. We will just have to see what they do over there. We do have this high, low, higher, high. Even though the wick went higher, look at the bodies. High, low, higher, high. That would be a breaker block. Extend it through order block. Extend that through inversion. Pull it through. That is where we went up into above these highs. Anyway, it is now 9:38. I hope that you have gleaned some insight from this. Hopefully you have learned something new. And we're going to close this one up. Let me look at the calendar. Let's see for next week. Next week we have nothing on Monday, Tuesday, 10 a.m. feature Powell testifies. That's not anything major. Wednesday, we have a 1 p.m. 10-year bond auction, which is a medium impact, nothing major. Thursday, we have 8:30 core CPI. We have a few red folders there. Friday, 8:30 PPI. And 10 a.m. we have the prelim UOM, consumer sentiment. Definitely not one of the cleanest weeks. Definitely, if I was looking to trade, I would probably on Tuesday I would probably sit and look at the market at 8:30, but I would expect something at 9:30, or I wouldn't say that I necessarily would expect something at 9:50, but maybe 8:30, 9:30. Wednesday we don't have anything that's high impact. With that one, I would probably just glance at the 8:30 and look at the 9:30, even though there probably is not going to be anything clean. Thursday we have that CPI, and Friday that PPI, which PPI is probably going to be the big smoking gun for the week. CPI 8:30, I would definitely be sitting down at that 8:30 looking what they give me, and maybe 9:30. It's a difficult call on this one. I'll sleep over it and I will let you guys know by this weekend when we will do a stream. But I'm thinking about Wednesday. We might do a stream Wednesday. Let's sit down and, well, let's just start at the 8 a.m. and shoot for 9:40. But I'll think about it and I will post the link of the stream on the social platforms once I have decided what I want to do. And then we will gather once again for another live session next week. So hopefully you have found this one insightful and useful. And until the next one, be safe.